Hello and welcome to DC Capital. This is episode 17 and also this will be the last episode of the Index Futures series. And in the following week I will start a new series called London Open Session, and in there I will talk about my specific trading plan during the London Open kill zone and what I'm looking for specifically during that time of day. So in this last episode I will specifically go over the external and internal range liquidity for profit taking, and also I will revisit the power of free concept during the last week of trading. And with that being said, let's jump right into the weekly review for the S&P 500. Welcome to the weekly review. This is the daily chart for the S&P 500, and in last week's trading we can see that on Monday, Tuesday, Wednesday and Thursday price traded lower, and on Friday NFP price traded higher to reprice this fair value gap. Weekly profile for the S&P 500. Classic Tuesday high of week. Usually we see the high of the week in the London Open session or the New York session. In this case, we see the high of the week formed during the New York session, and we are trading above Monday's high. From there, price is trading lower. ADP on Wednesday, high impact news event, pushed price higher into a sell side imbalance or fair value gap. And from there, price is trading lower into Friday, and on Friday, price traded higher to reprice into the daily fair value gap shown on the previous slide. This is Monday's trading for the S&P 500 on the 2-minute chart. We are operating in the New York afternoon session from 1:30 to 4 p.m. Price most recently rated the buy side liquidity pool. Buy stops are becoming now market orders, and we are looking to short the market after the bearish market structure shift. And we can see that here, as soon as this short-term low gets violated, we know that the order flow is bearish and we're looking for short opportunities. We are entering in this fair value gap in here, and the stop loss is above this short-term high, and we are targeting the sell side liquidity here and the volume imbalance for the first partials in the internal range liquidity, and for the full take profit we are targeting the sell side liquidity in the external range liquidity below those relative equal lows. This is Tuesday's trading for the S&P 500. We are operating based on the 15-minute chart, and we can see here that price is trading higher and is rating the previous day high, which in this case is Monday's high. When I'm starting my analysis for the day, I always keep the weekly profiles in mind, and this is leading into my thought process for the weekly high to form on Tuesday during London or New York session. I know there's a 70% likelihood for the higher low of the week to form during that particular day and time. So with that mindset, I'm anticipating some moves in the future. And this is what we can see here. Price rate higher, we are above the midnight opening price, and we are rated the previous day's high. Also, think about power of 3. We are opening protractionary stage higher. This is the Tudor swing to trade up into a premium PD array, which in this case is the Monday's high with resting buy side liquidity. Orders are getting distributed and price is trading lower, finding the low of the day, and from there it is trading higher to close the day. And this is what we can see here, the standard power of 3 pattern, the opening, the up move, orders are getting distributed here. Smart money is engineering liquidity for longs, and they are counterparty to that. So they are distributing their shorts. They are shorting heavily in here. And price is declining, finding the low of the day, and is trading back inside the daily range to close the day. Opening, up move, down close. Standard power of 3. The middle of the week, this is Wednesday's trading. ADP high impact news report due to release. I'm expecting some sort of manipulation, and we can see here that price traded higher into a premium array, which in this case is the sell side imbalance fair value gap, and also price traded above those relative equal highs to engineer liquidity. Again, think power of 3 concepts. We can see the opening, the Tudor swing higher above the midnight opening price into a premium array, and the down close, the down move for the day. Opening, up move, down close. Power of 3. This is Wednesday, zoomed in on the 2-minute chart. This is where the magic happens. On the previous slide, we saw that price traded higher into this premium PD array based on the 15-minute chart, the fair value gap. And after this PD array has been mitigated, I'm looking for confluences to short the market. And I'm waiting for the bearish market structure shift and the creation of the fair value gap. This is what we can see here. Market broke down with displacement, bearish market structure shift, fair value gap entry, and again displacement lower, bearish market structure shift, fair value gap, possible scale in here, and targeting for the on-close orders time period for profit taking. This is Thursday's trading on the 1-minute chart for the S&P 500. We're operating in the New York afternoon session, and we are looking for shorts after the buy side liquidity has been raided and price is breaking market structure to the downside on this candle here. And my entry is based on the volume imbalance, which we can see here delineated with the orange box. And my first profit objective is the fair value gap in a discount market. And this is where I'm taking off the bulk of the position, and I'm leaving a small position on the table to aim for the external range liquidity for the sell side to be taken. This is Friday, the first of the month, and NFP is ready to hit the market. For me, of course, I'm standing sidelines. I'm not playing here for some profits because in my opinion it's just casino time, and even if you have the right levels, the right PDA raise determined, and you are right on bias, the likelihood for you to get a fill is really low because the brokers are not allowing you to get a fill. And if you get a fill, your fill is really worse. And yeah, you wish you would have stayed out. So for me, there's absolutely no interest in trading the NFP on Friday. But either way, we can see that price manipulated heavily lower, taking out the sell side liquidity, and is below the midnight opening price. And from there, price traded higher into the daily drawn liquidity, the fair value gap. With that being said, I will finish this weekly review here. And now we're starting with the market outlook for the upcoming trading week. Welcome to the market outlook for the S&P 500. This is the daily chart. And in the last week of trading, we saw that price was declining, and on Friday price was trading higher back into this fair value gap and into this bearish order block. I am seeing weakness in the S&P 500. I'm not seeing strength, and personally I'm expecting lower prices for the S&P 500, and I'm looking to short every rally higher into a premium PDA array. But on the other side of things, we see that we have relative equal highs here and here with resting buy side liquidity and this daily fair value gap, which could be a drawn liquidity based on the daily chart. So what I'm saying here is that my focus will be on shorts. I'm not expecting big moves to the upside, and I want to see the US dollar trading higher. This is the US dollar daily chart market outlook for the upcoming trading week. We can see that on Friday the US dollar declined aggressively lower and also created a bearish order block, which is delineated here on the charts, and a potential drawn liquidity could be this fair value gap inside of the 40-day look back period of IPDA. But overall, I'm still bullish for the US dollar, and seasonal speaking, during this time of the year, the US dollar is likely to rally higher, and therefore I'm expecting a risk off environment and the US dollar to trade higher and seeking buy side liquidity and premium PDA arrays. On the next and last slide for the market outlook, I will show you a seasonal chart for the US dollar and its likely direction during that time of the year. Okay, this is the seasonal tendency chart for the US dollar. We can see that the black line is delineating 35 years of history. The dotted red line is delineating 15 years of history, and the blue line is representing 5 years of history for the US dollar. And now let's focus on the November time period. We are at the start of November, and usually we see a October low during the middle of the month, and from there a rally higher at least to the middle and usually till the end of November. So therefore, seasonal speaking, I'm expecting the US dollar to trade higher into a premium PD array, seeking buy-side liquidity. With that being said, I will finish this video here. Thank you so much for supporting the channel and also to be a part of this absolutely amazing community. This video will also finish the Index Futures series. I hope it was helpful for you and you can implement something into your own trading. And in the next week, I will start the new series called London Open Session. Once again, thank you so much for being a part of the community. And if you like the video, don't forget to give it a thumbs up, comment and subscribe to the channel. I wish you all the best and a successful upcoming trading week. Be safe. It's DC Capital.